A very good morning to you, and I'm Malcolm Graham Wood, and I'm here on Core Finance to do another one of the CEO interviews I love doing so much. And I'm absolutely so pleased today because I've been chasing John Wardle, who is the CEO of Amerisur Resources, for several years to come in and talk to us. But he lives in Columbia, and that's where he likes to stay, being hands-on in the business. So very, very warm welcome, John.
Thank you for having me, Mark.
Lovely to see you. The interview here, as usual, will be everywhere immediately after here, so you'll see it on social media and, of course, Core Finance, but also on the website, on the Amerisur website. John announced the Amerisur results this morning, and he's just done a big presentation to the analysts and so on. So there's a really good presentation which he spoke to at on the website. So we've got a good start, John. So. Okay. Let's say, just for the people who don't know that much about Amerisur Resources, why don't you give us a sort of a rundown? Tell us a little bit about the business.
Okay, thanks, Matthew. Well, as you know, we're a South American-focused E&P company, in particular Colombia. And within Colombia, we are greatly focused in the Putumayo Basin, which is the southern part of the country. And it's the area that's not really been explored and developed to date, for all the reasons that we understand. So we're focused there. You know, we have a number of blocks there that's grown over the last 18 months through some very strategic acquisitions. But also we are present in the Llanos Basin with our Mariposa discovery, which we announced earlier this year, which is an important area for us too. But our core focus really is the Putumayo, where we see we've got an edge in both technical understanding, infrastructure obviously with the OBA, and the exploration portfolio that we have.
Brilliant. Well, we'll come back to the exploration portfolio, the ABA, and so on, production later. But how did you manage to get? I mean, obviously you decided to stay in the southern part, in the region because of the OBA and so on. But how did you secure such a good position in the Putumayo Basin?
Well, it's been a process, and we always wanted to have that sort of scale of portfolio in the area because of our understanding of what the potential is. But in the high price era, of course, the cost to entry in those areas was very, way beyond what we would be able to pay. And we basically took advantage of the low cycle. We made a number of unsolicited and perhaps cheeky offers to groups which were either reorganizing or had not enjoyed the success that we had in terms of building a viable business. And the overall net cost, as you see in the presentation, is very low for what we have actually achieved.
So these smart deals that we've been looking at over the last 3 years, because you were one of the first people to see things when the oil price was falling, so you actually sort of hunkered back quite a lot at the time. And although it didn't, some people didn't think it was the right thing to do. Actually, you hunkered back and you didn't spend too much money. You cut back on your capex and so on, but you actually managed to find 3, 4 companies or asset packages which came with almost no cost at some stage?
Absolutely right. We took that decision and in 2014, you can never see the future, but we've all lived through these cycles before, and it's part of the business. And the trick there is to maintain yourself in good shape, and we did hunker back. We went back to the very highest margin production. At that time, we were still trucking oil. Transport was a significant cost. Yeah. And we managed to maintain our financial viability very strongly in that, while still having activity, but on a reduced basis. Yeah. And adding to our understanding, while we looked around and saw what was happening to the competitor companies in the basin, because in 2012, the entire area exploded, and suddenly it was all contracted, where we had a vision of being able to grow out to. So given the downturn in the cycle, we managed to take advantage of that.
Excellent. And you've had quite a lot of success in the last year or so, haven't you? With the drill bit. Talk us through your sort of major league successes in the.
Well, I think that has been underestimated by the market, and that's possibly.
Yeah, but that's what I wanted to talk about.
Absolutely important to do so. Within Platinillo main field, we've had, and as you saw in the analyst visit when you came down with us last September, we've had a tremendous amount of success. Stepping out beyond that envelope into Pad 2 North was always going to be an exploration risk. Yeah. And it didn't just come in on par, it came in significantly better than
Yeah.
we thought. And it's now demonstrated that it is actually a separate accumulation
Yeah.
by dint of having a bigger content of oil, because
Yeah. It's a different level, isn't it?
it comes in at the top virtually the
Yeah.
same as the main field, but the bottom of the oil is deeper.
Yeah.
The exact contribution of that area to additional reserves depends on where that barrier is between main field and
Yeah.
this accumulation. But we'll be finding that out with further drilling as we go along.
Yeah.
So great wells, good production. Also in the Llanos,
Yeah.
a tremendous result in CPO5,
Yeah.
as we've talked about. And that really is, it's a different sort of thing up there. This is very light oil, it's 41 API,
Yeah.
so very valuable in the area.
Yeah.
High productive wells, 120 feet of net pay in a beautiful sand. And not just there, the play extends and it's under good 3D seismic coverage. So the well that we're planning to test further up dip,
Yeah.
and as we all know, if you're going to look for oil, it's better to look up than
Yeah.
down. And we expect to drill that in the early part of next year with our partner ONGC.
So for the time being, you've got you're going on long-term test for the well, for the discovery well, yeah.
Yes, Mariposa 1 will be on very shortly, I'm told by the operator,
Yeah.
on long-term test. And we expect the volumes to be relatively significant there.
Yeah.
This block is on trend with Llanos 34, where Geopark and Parex have had such tremendous success
Yeah.
in the same sort of play.
So and you've got 30% of the block and more well. You've already said that you think you're going to drill one more well, and I mean that 30% of that block is going to become very valuable. I know that ONGC do things at sometimes a slower pace, you might say, than others. So people who would have hoped to had that things moving a bit
Sure,
further,
sure.
but they have actually put some money down and said there's going to be a program, haven't they? So although it's slow, you're not too concerned about it.
Absolutely.
You'd like it quicker, I imagine. But
You're right. We would much prefer that things happened overnight and that those barrels were flowing. But sometimes slow and steady gets you to the result,
yeah,
the overall value result, in a better shape. And yes, our partners are fully committed, as we are ourselves, to developing and further exploring the block.
yeah.
And the potential is significant.
And that oil, for example, because it's so far away, it's obviously not going to go to the OBA or anything else. But you'll sell that. I heard you say recently you might even sell that at the wellhead.
Sure. Rather than building an infrastructure or an administrative unit that handles those sales, we will still negotiate the very best price. But the wellhead sales look attractive. There are a number of people proposing that, companies proposing that, and the demand for that sort of oil in the Llanos is simply massive.
It looks like a cracking asset to me. And
Oh, yes.
I imagine that being a national company doing it, they'd like to take you out of your 30%. But I did hear you say that it's not for sale.
It's certainly not for sale at the moment, I'd say that.
Right, John, if I may, I'd like to talk about the OBA pipeline because I think this is important. We'll come back to production targets and drilling programs, but it is so much about, the questions I get all the time are so much about the OBA pipeline because we need to know the current state, people want to know the current status. All of a sudden you're putting quite a, after the quietness on the social issues, recently you're putting quite a lot more crude through that pipeline, and there are various different things. People talk about tariffs, they talk about different things on the other side of the river and so on. Can you give us an idea? Because in the portfolio, the presentation, you've done a great sort of map there, which because it's on the other side of the river, isn't it? Some of your
Yes.
discussions.
That's right.
In short, medium, and longer term.
That's right. Our wholly owned piece is all in Colombia, of course. And there we're doing a number of upgrades and adds, which take us to a significant increase in export capacity in what we can move across and how quickly we move it across and how much redundancy we have. On the other side, once it goes into the Ecuadorian system, as you mentioned, we have had a significant uplift. We're significantly above what the minimum contracted volume of 5,000 is. I think it was around about 6,400 average this month, with a peak last month of over 10,000 moved in a single day.
Yeah.
There are a number of specific activities that we're undertaking at the moment, which will take us in the short term above a 10,000 barrel per day guaranteed capacity in Ecuador. And they're basically quite small things.
Yeah.
And they are outlined in the presentation. Basically, upgrades in the local systems. The Chorizo pumping station is the short-term view.
Yeah.
In a medium sense, there are other options to enhance the efficiency of the roader system.
Yeah.
And then in the long term, should the blocks that we have around the OBA, which is our core focus for 2017-2018 drilling, should these resources become reserves,
Yeah.
and to a great extent we're very, very certain of that. There are other options such as building additional loops,
Yeah.
or indeed a whole new connection. It suddenly becomes very economic and attractive to build a whole new connection to Lagagria.
It's looking, and that's looking good. So that takes us on to the sort of your production targets. You've had a sort of slightly mixed year because way back in July you had the social issues, which you say I think are pretty much behind you now. Although there will be sort of small problems, I guess. So the social issues mainly behind you. You now got your average production for the year. At the announcement today was slightly lower than you would have hoped, but of course you're now coming through it with quite decent production. What's your year-end production forecast now, and your medium and long-term sort of thoughts on life?
Well, as you say, the first half was basically on plan, and we were around about 4.4 average over the year. We've lowered the end of year average production over the entire year to something around 5,000. I would guess it will be in excess of 5,000.
Yeah.
The second half, albeit production has risen through drilling,
Yeah.
through well treatments, through optimization of reservoir, these stoppages that we suffered through the social issues in the Putumayo, down to the peace process and the general improvement of conditions, operating conditions, and the future view, they impacted us. However, we're significantly in excess of 6,000 now. In terms of the plan as to how we would get to those rates, it's working.
Yeah.
And the exit rate is going to be in excess of 7,000.
Yeah. And so you'd expect probably, if you were doing 1st of July for a year, not the second half on first half, you'd probably be an average of 7,000 by next summer.
Oh yes.
Yeah.
Well, I
Maybe
think
more. Yeah.
my view is that we'll reach the 6 to 7. We'll pass that in early February.
Yeah.
So I know there's a little bit of disappointment about the average over the year. But
I understand that, and I think shareholders will too, and the social issues, as I said, will should be eased off a bit. The drilling campaign, I think, is what I'd like to ask you about next, because I've got 16 wells in 18 months, something like that, and you've got an exciting drilling campaign obviously in Llanos Basin, and you're doing this great N sands anomaly and so on. Talk us through what you've got and.
Right. Well, there is a lot to talk about. Moving from the core outwards, there are another 2 wells in Pad 2 North, which still don't cover the entire potential of that pad, but we're reviewing how to drill potential further wells from there, whether to go from Pad 3 or Pad 2. Subsequent to that, and we expect the environmental licence modification to be approved in December, we'll be drilling this N sand anomaly in the central part of the block. And remember that Pad 2N is still not halfway through the block.
Yeah.
That is a significant development, the N sand. And should that come in, this pad is targeting around about 19 million barrels of recoverable.
Right.
We're very hopeful that comes in. All the data we've seen to date on wells drilled at Pad 2 North, they also corroborated the model. That should be good, and that will be drilled in the early part of the year.
Yeah.
So that will add a separate field within the Platinum block. Now, out with that, we're focusing on the blocks immediately around Platinum, 12, 9 and Put 8, which have low-risk prospects, generally offsetting existing fields, and which can be tied back. Well, first of all, they can be drilled relatively safely, because it's the same sort of drilling.
Yeah.
We know all about that. We've done
your own rig.
Own rig.
Yeah.
Full control, and they can be tied back virtually immediately into the OBA.
Yeah. So you will be drilling the 16 wells, and it's an exciting period. And in sort of quarterly, you'll have something each quarter. It's not all being sort of pushed up together, which is good in different parts.
That's right.
And fully funded.
Fully funded
at $45 oil.
Exactly.
So you've got no worries about that. But as you increase the production, as you already mentioned, you will get revenue, which will help you out with that as well, so that people don't need to worry on that front.
And that's due to the fact that our cost structure and transport costs are set up to give us a very significant
And
netback.
that was one of the last couple of questions. So, we talked about a long time before the ABA came on about how the cost structure, has that come out as you expected, as you planned?
It's actually come out better than we thought. The transport costs are very low, of the order of 320, 340, which is a massive difference to what it was. In fact, in the presentation, there's a good graph showing the breakdown of a barrel from last year to this year.
Yeah.
And basically, in summary, our operating costs are down, our transport costs are way down.
Netbacks?
$45 sales price, which is around about $49 Brent, we're getting almost $30 a barrel.
Yeah.
Operational netback.
I mean, that's first class. Why don't you give us an idea of how this impacts on reserves, John?
Right, well, reserves.
Keep the tricky questions towards the end.
Well, this is the one thing in the business which is not in one's control because we don't calculate it. We have our own view, but we tend to take the technical view, whereas the reserves assessors take a statistical and production-based view. So obviously you can't discover new fields in the Llanos and you can't discover new accumulations in Platania without having a positive impact on reserves. And I fully expect that this year. The quantum of that in terms of what we've already established in production history, and as I say, the long-term testing, Mariposa should be on in the next week or so, that will obviously add P1 reserves.
Yeah.
In terms of 2P, I'm not sure how much we will get.
Yeah.
But I'm hoping for an increase, I just can't say how much.
And I appreciate that, and it's difficult to tell. But you put some decent numbers in the forecast and in the presentation, and if they were to come good, I have to say that I think that the valuation on the business is, well, we all think it's astonishingly cheap, but I think this will work through in due course.
Yes.
And there's plenty of stuff in that presentation. 16 minutes or 18 minutes, whatever it is, goes very quickly. And, you've come over all the way from Columbia, not just to see me, but to see shareholders and so on.
Yes.
Why don't you give us a couple of minutes on putting all that together and how you see Amerisur in the next year or so, John? That'd be great for us.
Okay, perfect. Well, in general, as you can see, and you and I speak, I think we last spoke about 3 months ago, I'm very, very positive. The delays that we've had in this second half due to social issues are actually a characteristic of an improving situation.
Yeah.
And the issues that were in play are issues that, in the vast majority, can only be solved by central government. And the big advance we've had is that central government is committed to doing that and they're acting.
Yeah.
So I don't see this as a symptomatic thing going forward. I see us having a relatively good play fairway going forward in terms of being able to operate and have activity. Yeah. There will be bumps in the road, there always are.
Yeah.
The country is going through fundamental change, but it's changed for the better.
Yeah.
So given that, given the portfolio that we've put together, given our understanding, both surface and subsurface, given the infrastructure, given the way that we can drill wells at under $4 million, completed, online, given the netbacks that we have, the future has to be very, very positive.
I think I think that you're sitting here with a low-cost production base, as you say. The wells are relatively inexpensive. You've got the infrastructure set up nicely and getting better. I think you call it a robust financial position.
Yes.
You've added one or two to members of the board so that you tick all the governance boxes. As far as I'm concerned, Amerisur looks in fantastic nick, John. I really appreciate the fact that you've come in to talk to us at Core Finance today. And thank you very much indeed, and have a safe journey home.
Thank you very much for having me.
Thank you very much.
I look forward to a good week here.
I hope you enjoy it.